Welcome back. It's time for today's earnings exchange, and we've got two consumer names and a tech stock on deck. Joining me now with our trades is Courtney Garcia. She's Senior Wealth Advisor at Payne Capital Management and a CNBC contributor. Courtney, welcome. Alrighty, let's start with Salesforce. They're going to report first quarter results. Goldman noting it's a historically weak period, and a miss shouldn't necessarily derail their path to projected 10% subscription revenue growth, and shares up more than 25% over the past year. What is your take on Salesforce, Courtney?
Yeah, this could be a weak quarter for them. It just seasonally tends to be the first quarter is a little bit weaker, and they might have some headwinds with the dollar being strong and some of their foreign sales. But they have really been a company you don't want to discount going into earnings. They have beat their earnings revenue estimates every time the last 2 years by an average about 1%. And I think looking forward, they do have a lot of positive signs here. They have over 90% customer retention rate. They have a lot of ability to upsell those current clients or provide them with additional sources that they now have, because really not just a CRM, they have a whole span of products at this point in time. But I think the big story with them is going to be artificial intelligence, which there's definitely an appetite for with their customers. But at a certain point in time, customers are going to start to demand and expect that. And that ultimately is going to be something that is going to be very capital intensive for them. And so I think seeing where they're going with that in the future, and if they indicate anything on the earnings, is really what you're going to want to watch for.
Right. And can they do it in kind of a cost efficient way? How good is Einstein AI and so forth? Well, we can get some answers to that. Jim Cramer will sit down with Salesforce CEO and Chairman Mark Benioff following those results, 6 p.m. Eastern on Mad Money. Look forward to that. Meantime, we'll move along to Dollar General. It used to be the darling, not so much these days. Barclays is keeping an eye on market share expansion, though, on inventory management and the impact of Family Dollar closures. The shares are up 4%. Courtney, they've brought back, I think the old CEO had kind of done such a great job in the past. Would you be a buyer here?
I would actually stay on the sidelines here. They've actually really faced a lot of pressures here, whether it's issues with shrink, which is basically goods getting stolen. They have issues with their inventory. They have issues with their staffing. And I think a lot of those, I just have not yet seen a light at the end of the tunnel here. And they're putting a lot of going in forward, they're remodeling a lot of their existing properties, and they're also opening a lot of new stores. That is very capital intensive, especially at a time where it is very expensive to borrow money. And I just don't know if that's going to be enough to bring them forward. So I would stay on the sidelines for the time being. All
right. And talking about turnaround stories, Foot Locker is down another 30% so far this year. They had a bad last quarter. They've got shifting relationship with Nike. UBS found sales growth and traffic decelerated again last month. What do you do with this one?
I would, again, stay on the sidelines here. I think there's just a lot of structural long-term issues that you see with Foot Locker, mainly the fact that they're so dependent on Nike, whether it's Nike or your other brands. They're going away from wholesale and more into that direct to consumer. Mm-hmm. And then they have a lot of exposure to malls, which is reducing foot store traffic. And so I think they really have to make some big changes in order to see us like what is going to bring them that revenue growth in the future. Yeah. So hopefully they have a good story for us, but at this point in time, I don't think you're going to see that. You saw shares were down almost 30% after their last earnings, where they really disappointed on holiday sales. So I think we really have to see, have they picked things up? But I'm just not hopeful enough yet. I would stay on the sidelines.
Even
here.
Nike hasn't done that great. It's not their time, this category. Yeah. Courtney, thank you. Courtney Garcia, Payne Capital.